Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Amazon changes plans to order Nvidia's super chip to await updated model, as well as that Ether jumps 16% on US ETF approval speculation. We've got lots to talk about in the charts, also with lots happening on economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Amazon. Now, Amazon's cloud computing arm has now changed their plans to use Nvidia's latest and most advanced super chip to wait for a more powerful new model. This comes as investors fret about a serious dip in demand between the $2.3 trillion chip makers' product cycles, pardon me. Now, of course, we covered this Nvidia super chip released, or at least the more updated model and the one that's now awaited by many consumers. And that chip obviously has kind of been named Blackwell. And that is to be is expected to kind of arrive coming the end of this year, around Q4 and that sort of thing. Now, of course, when we spoke about that chip being released, we spoke about it in the sense, it's very positive sense, with Nvidia's CEO basically claiming that this chip was to be far more powerful than anything we've ever seen, and really is designed to benefit those AI customers, so those looking to develop and train new language models, especially large language models. That was the kind of key note from Nvidia's CEO about what these chips could do, with the chips possessing that extreme power never seen before. But what this chip also did was it came only a year really after the previous chip before that was unveiled. Therefore, the kind of product cycles, the kind of period between those two chips is really not significant at all. And so as a result, what we're seeing now is certain customers and as a result demand being very much affected by this latest super chip release. And as a result, it's likely now that we're going to see this kind of gap in demand for Nvidia, as ultimately customers wait until this next super chip is released rather than buying the older chip, which is called Hopper. That was the one that was unveiled a year before this latest one, and this is obviously a key worry for Nvidia, which is essentially creating a situation for themselves now where they're losing all the demand that they might have seen before with their older chip. And they're now going to see a complete lack of sales for basically this entire year until that next chip is moving on to the product lines and starts being shipped out to those customers and businesses that require those chips. So that's a serious worry, and as a result, that's a serious worry for investors. And as a result of that, we're likely to see that take effect within the stock market and affect Nvidia's share price, as it's likely that Amazon is not the only kind of business and customer that is thinking about adjusting their kind of chip plans and that kind of thing, and the way that they're integrating the new Nvidia chips into their AI infrastructure. As we have noted many times and spoken about many times, the latest developments and the latest plans by Amazon and other key tech firms and that kind of thing to build on their AI infrastructure and make new language models that will benefit their AI language models that will benefit their customer base. And Amazon's been a key one in that, but also Google and a few others that we've spoken about, such as Meta and Apple. And those firms are also putting big money into acquiring new teams, so it makes sense that they're also putting a great deal of money into these new super chips, which are being used for the development of AI models. So that's why this article is, of course, so important to topic to cover, pardon me. And add to that the fact that Nvidia's seen a massive rally in its stock price, at least up until April of this year, as a result of the kind of increased hype around the AI revolution and Nvidia's role in that, with Nvidia really powering the kind of chip making side of the AI revolution, which is of course an essential part to any kind of business or kind of product line, as ultimately Nvidia and those other kind of key chip makers are those that underpin this AI revolution. And as we saw the kind of common quote to do with the gold mining phase in the US, those that sold those kind of spades and the diggers for those looking for gold made more money than those looking for gold. And that's kind of the case for Nvidia, at least, who is selling the kind of spades and the gold diggers, as ultimately they are the ones that are going to be powering this AI revolution. But ultimately, these gaps in product cycles are really going to affect someone like Nvidia when they want to kind of release new chips all the time. They want to kind of keep on expanding on their previous AI infrastructure. But ultimately, is that going to cost them in the long run by reducing the demand for the more recent AI chips or that kind of thing? So, and that's kind of what we're seeing now with Amazon. So lots to think about there. With Nvidia back in March releasing a new generation of processors named Blackwell. This unveiling came barely just a year after its predecessor Hopper began to be shipped out to customers. The Nvidia CEO Jensen Huang said that the new processor would be twice as powerful for training large language models, which led many to dub the new chips as AI chips. Amazon's Web Services has now told the FT that they will no longer proceed with a plan where Amazon would use the older Nvidia Grace Hopper superchip, and instead the company division will now use the successor chip named Grace Blackwell. Nvidia's quarterly earnings report is now expected to be released today, with analysts expecting the chip maker to report that their sales have tripled in the latest quarter. Analysts at Morgan Stanley, for example, have warned that whilst tech companies have pledged to invest heavily into AI infrastructure, there is still anxiety about the pause in demand in front of Blackwell. The production of such Blackwell chips will ramp up over the course of this year, with the chips being expected to be delivered in Q4 of this year. Neither Amazon nor Nvidia have yet confirmed the value of the future chip orders. So a very important article there covering Amazon's change in plans, and obviously keeping us updated on the topic of Nvidia, who does have their kind of earnings release today. So make sure you're listening out for that. That's all to talk about on this article. Next article to talk about is talking about cryptocurrencies, which of course we've been covering a great deal recently, as of course we've seen a great rally in those key cryptocurrencies, especially Bitcoin, but as we can see here as well on Ethereum. Now, the price of Ethereum has now jumped higher by more than 16% following increased speculation that the SEC will provide asset managers with the green light to create a Ethereum ETF. This comes as Bitcoin also rose over 6% last night to reach $71,000 a Bitcoin. Now, of course, we covered the period where the ETF did approve, where the SEC, did approve of those Bitcoin ETFs. That was a very, very significant move, which came after the SEC really pushing back on any of those ETF applications over the years, really delaying any kind of rulings on the topic of cryptocurrencies, and basically being very anti-cryptocurrencies. As we do know, there's a great deal of worries over market manipulation still with cryptocurrencies, which was a key justification for why there shouldn't be a Bitcoin ETF. But ultimately, as we did see in January, those Bitcoin ETFs were finally approved. And with that, we saw Bitcoin rally to extreme levels. If we can think back to those times just before the ETF approval, Bitcoin had just rallied its way up, I believe, into the $40,000 a Bitcoin territory, maybe 36 area. But ultimately, Bitcoin had rallied to the upside in speculation of the SEC basically approving those ETF applications. That said, when the ETF applications actually did get approved, we saw a significant sell-off in Bitcoin, as we saw a great deal of outward flows in Bitcoin's volume, basically as a result of those ETFs being approved. So what we actually saw was investors exiting at that point rather than investors entering at that point. And as a result of that, we saw that large retracement in Bitcoin's price. But following that, the kind of, the rally once again occurred for Bitcoin, with Bitcoin driving further to the upside, breaking above those levels seen when the SEC approved on the ETF. And Bitcoin really pushed to the upside all the way up until April, when we did, of course, hear that change in the Fed's rhetoric, and as a result, Bitcoin sold off from that $71,000 a Bitcoin level. I believe a bit higher than that, actually. So yeah, price did sell off around $78,000 a Bitcoin, or something around that. We'll check on the charts in just a moment, but yeah, that sell-off did take place, and we're now currently hanging, as this just said, around that $71,000 a Bitcoin level. And of course, should this ETF be approved for Ethereum, it's likely that we see such price action kind of relayed on Ethereum as well. Arguably, you could always argue that, of course, such price actions already been priced in out of speculation, but still, it'll be interesting to see what does happen depending on the SEC's kind of approval or rejection. So make sure you're listening out for that, with the sharp rise in cryptocurrency prices catching most traders off guard, since most have expected the SEC to either delay or reject the first ETF by the Thursday deadline. Only a few months ago, back in January, the SEC approved new ETFs for the cryptocurrency Bitcoin, which ended years of delay and speculation over the ETF status, with the decision to allow new ETFs causing a surge in Bitcoin's price. Since the spot Bitcoin ETFs have drawn in more than $10 billion worth of funds, the first of the SEC's ETF Ethereum decisions are due this Thursday and Friday for the asset managers Van Eck and ARK Investment Management. So some very important decisions to be made this week with regards to the ETF applications for Ethereum. Be very, very interesting to see whether Ethereum does get approved for such ETFs, as it is kind of the second most maybe stable, or at least kind of well known cryptocurrency, you could say. So it'll be interesting to see what does happen with that, and make sure you keep your eyes out for any news from the SEC to do with such a topic. That's all to talk about on the articles, though. Next to talk about is, of course, the charts, where we do have lots of interesting things happening, and that is certainly the case, as ultimately, in my opinion, lots of opportunities are shaping up for us today and for the end of this week as well. So for Thursday and Friday as well. As to begin with, like always, we are of course talking about US indices, more specifically the Dow Jones, the US 30, which did push to the upside last week, rallied a great extent, of course, following that inflation data coming out and showing that inflation was on the decline, causing the US 30 to push higher, because ultimately investors started to factor in interest rate cuts and that sort of thing. So whilst we did see that ending off last week, we did kind of start off the week with somewhat of a retracement, with price selling off from those new all-time highs and pushing down into this area of liquidity, and arguably breaking through that area of liquidity. And as a result, it looks like we're now somewhat hooking back on ourselves to begin off Wednesday and pushing once again into this area of liquidity, which does kind of hint to us that we are now looking at a potential retracement to the downside. Why that's interesting, of course, is because we have noted out some very key areas of liquidity and key Fibonacci levels, which of course we were expecting price to react to and make its way down to then move above from. So that's why this is kind of very interesting price action to note. And those key levels to note are of course the 50% as well as the 6180, which line up quite nicely with this key liquidity zone that we had noted off down here when price was initially trying to push to the upside. So it would make sense for price to make its way down to those levels, as this kind of is a key area which price has used before to gain momentum to the upside, or at least has been a key area which price sold off from. So we know that liquidity does lie within that area, and it would make sense for a retracement to take place as a result of the inflation data. Whilst it does provide a dovish image for the Fed's monetary policy, ultimately it did come in line with economists' expectations. So we can't kind of be too positive around the data release, and therefore I think we will see this kind of movement nullified by this retracement taking place. Add to that, on the technical side, this bearish divergence, it does seem like the US 30 is set to retrace down to these levels, and due to the overall macroeconomic perspective for the US 30 still being positive, ultimately these levels do look nice for a continued push to the upside. Next to talk about though is of course the dollar. Where whilst there still is not much to say because price is kind of consolidating, stagnating, not much is happening, and price is really just in the same levels that it was last Friday, or Friday last week. Ultimately, there's still some key levels to note, and things have, whilst they have not changed, we are receiving a great deal of data today which could affect the dollar, as ultimately we are not only having numerous Fed officials speak today, which will greatly affect the dollar in the sense of, it provides new insights into the macroeconomic perspective of the Fed, but also we are receiving US FOMC minutes, which is of course always important to understand the Fed's monetary policy outlook. And I think as a result of that figure, we could definitely see price move to the, well, not as a result of that figure, but as a result of that news release, it will be interesting to see how the dollar does move, whether that be to the upside or downside, because on both ends we do have some very key areas of liquidity to note, with on the downside that kind of Fibonacci extension level of minus 27.2 lining up with that key liquidity zone. So it would be interesting to see whether price does make its way down there. And on the upside, we do of course have the key Fibonacci level lining up with that key liquidity zone around the 6180 level. So the dollar's in an interesting position to keep your eyes on, certainly. Next to talk about though is Euro USD, which certainly there's not much to talk about at all. Price is still sitting just on this area of liquidity and this key area of price action. So make sure you're kind of keeping your eyes on Euro USD, but certainly not as much is seemingly happening for something like Euro in comparison to other assets. That said, we are receiving the ECB President Lagarde's speech today, so listen out for that for sure. Next to talk about though is pound yen, which is an interesting position after pushing higher recently and now breaking above that minus 27.2% Fibonacci extension level, which we did of course note last week and have now noted this week. And as I said, I expect some bearish momentum to be kind of added into the market as a result of price reaching that level, and as a result I am kind of expecting a retracement. So price making its way down to that 38.20 is definitely feasible, and should price make its way down to that level, we've certainly somewhat got that kind of bullish sense to do with the market, since it does line up with that key liquidity zone, and it is that kind of Fibonacci level is lining up quite nicely with it, as well as that we know that there's a great deal of orders within that level because of the liquidity, but I've just mentioned that numerous times, so I'm sure you get my gist. But that's the kind of things that I'm seeing currently on pound yen, but that said, we are in uncharted territory at the moment for price, so it is always hard to make assumptions and that kind of thing. Next to talk about though is Bitcoin, which of course we just covered on the charts, which like other assets is retracing at the moment. I did expect price to kind of retrace all the way down to this 50% before we then found any more bullish volume to the any more bullish kind of momentum to the upside. That said, price did not make its way fully down to that level just yet, and price has kind of stopped just short of this 50% and is now somewhat moving to the upside. It'll be interesting to see though whether over today price can make its way into this key liquidity zone and interact with either the 50% Fibonacci level or the 6180, because I think from those two levels, price is, Bitcoin's in a very prime position to move higher. So definitely keep your eyes on Bitcoin. Next to talk about though is gold. Which, once again, like other assets, is in a very interesting position, with arguably price currently forming a flag somewhat, as we can see this kind of bullish flag. If I went on the 1 hour, it'd be easier to see, but we're limited by time. But yeah, like on other assets, I'm still expecting a bit further of retracement, maybe down to the 6180, which lines up with this other liquidity level. And from there, I could definitely see price moving higher, depending on, of course, US kind of economic data this week and next week, and that US FOMC minutes that we are receiving today. Lastly, to talk about, like always though, is oil, where there's not much to say. Price is still consolidating, ranging around this level. That said, you could argue that price is forming an inverse head and shoulders pattern at the moment, with this kind of being the shoulder line, that the baseline. So certainly there are some opportunities shaping up on Bitcoin as well. On oil, pardon me, don't write it off, and make sure you're keeping your eyes on Middle East politics, as that is also affecting oil greatly. That's all to talk about on the charts though. Lastly to talk about is of course the economic calendar, where, as I hinted to, we're receiving some very important data today. Now firstly, we're receiving numerous Fed official speeches, followed by that the Japanese balance of trade figure, and followed by that the New Zealand's interest rate decision and central bank's press conference. Followed by that, for Britain, we're receiving the British inflation rate figure, so that'll be very important for pound yen, with some very interesting forecasts being made, as well as that we're then receiving the Chinese FDI figure, as well as the ECB's President Lagarde's speech, and US mortgage applications figure, and US FOMC minutes. So make sure you're listening out for all of that. That's all to talk about on the economic calendar though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. That's all from us at Wildwood Capital. Have a great one. See you later.